Is it possible for a beginning commercial real estate investor to purchase a $5 million 66-unit property 1 block from the beach? It looks like this. Is it possible? Yes, it is. And you're probably thinking of 2 questions. Peter, how did she do it? And number 2, where did the money come from? Well, that's what today's video is on. In today's video, we're going to go over a little bit about the property, a little bit about the student, and how it all came together so you can do it too. All right, so first of all, my name is Peter Harris. I'm with Commercial Property Advisors. This is my book, Commercial Real Estate Investing for Dummies. And also I have my new best-selling book, Commercial Real Estate for Beginners. The link will appear for you to download it, no obligation. Now, in this video, what I want to do is share with you a little bit about the deal, then a little bit about the student. And then we'll do a short interview of where I interview her, then we'll come back and we'll recap, and I'll show you how you can do exactly what she did. Okay? All right, let's start with the property. So again, 66 unit is located in Texas. The purchase price was $5 million. It's an off-market deal. Now, as everyone knows, off-market deals are oftentimes the best deals you can get, right? And then it's 94% occupied, meaning that this deal was pretty stabilized. Now, the 66 units, the building did have deferred maintenance, which we will address in a second. We have money stored up for it. But it was a pretty stable property in a great location. Again, a block from the beach, right? So our student bought it for 18% under market. How do you do that? We'll talk about that in a second in the interview, okay? And number 2 other great things, there was rent upside. Now, all of you know that I preach that when the rents go up and the NOI goes up, so not only the cash flow goes up, but the property value goes up, okay? So important for your exit strategy, okay? Especially here. And next, we have the ability to implement RUBS. So RUBS is an acronym for Resident Utility Billing System, right? And basically what we're doing is we're charging back the utility costs to the tenants, okay? Meaning that our NOI goes up, right? And value goes up and cash flow goes up. So this property had rent upside and RUBS potential. 2 great things, right? Now let's talk a little bit about the down payments. I know you're wondering what was it and how was it done, okay? Now, for this deal, to get the best financing, our student had to put down 30% plus closing costs. Okay, so there was a down payment and closing costs of $2.2 million. We'll get to the point where how she raised it, but here's what it comprised of. So that there was a 30% down payment, and plus there was we had to include renovation costs to get everything up so we can increase the rents. Number 2, we needed working capital, right? So you need a savings account for your commercial property. Smart thing to do. Number 2, lender reserves. The lender wants us to put sock money away so we can get things done on the property. So we spend the money and the lender reimburses us. Okay? So the next thing I want to do is go over with you a little bit about our great student. Okay? All right. So her name is Allyson, and you will see her interview in a moment. And she left her corporate job about 9 months ago. And in her corporate job, she worked in a real estate division where she saw her corporation make a lot of money. She figured it would take her 15 years to make that amount of money. And she didn't want to wait that long. Probably you too, right? Now, so what she did was she started her own commercial real estate firm, right? With no experience and very little funds. And she contacted us and said, Peter, how do we do it, right? So we've been working with her for 9 months. And in those 9 months, she purchased her first property, which was a 7-unit property for $140,000, right? So very reasonable to get started. And then she purchased her 66-unit property for $5 million. And now today she has under contract a 241-unit for $18 million. Okay, so that's kind of her story here. Now she did face 2 big obstacles that she will address in the video. Obstacle number 1 was how does she finance a $5 million project? And number 2, how does she manage something that large with no experience? Okay, so what I want to do now is go to the video. The video will, I interview her. You can see all of this addressed. And then when we come back, I will recap so that you can see yourself doing exactly what she's doing. Let's go there next. All right, everyone. Hey, thanks for joining us today. I have a surprise for you. And this has been a long and awaited video of Allyson Pritchett, one of our prize students. And ladies and gentlemen, she has closed on a $5 million 66 unit, and she's just a beginner. So how did she do that? And that's what today's video is on. So Allyson, thank you for joining us today. I'd like to jump right into it, Allyson. So can you share a little bit about your background, maybe your professional background?
Yes, absolutely. So I actually started, as probably most people do, in corporate. So I majored in math in undergrad and then started out doing banking and consulting. Spent some time in corporate strategy after that before going to business school. And that's where I started to shift into real estate. Did a summer internship doing investing, looking kind of outside in at the real estate world with senior living. Spent some time in the development group at Walt Disney Company after that professionally, but kind of looked up and said, oh, it's going to be 15 to 20 years before I ever get to actually do a deal of my own. Mm-hmm. So that sort of started, the brain to thinking about, okay, how do I get to where I can do my own deals? So spent the next 4 years at Boston Consulting Group doing consulting, learning how to manage really complex, big projects and things like that. And then after 4 years, I said, this was never the long-term plan. It's time to get back to real estate, which is always kind of my passion and what I really wanted to do. So that's where maybe about 9 months ago, I put in my notice and said, hey, I'm leaving. And they were like, what are you going to do? And I said, I'm going to start a real estate investment firm. And to which everyone was like, whoa. But then the last 9 months, we've just been able to acquire a few different properties now. We've got another one in contract. So it's just been an incredible ride. It's doing all the things that I wish I could have done back when I was in the development group with a larger company. And now I actually get to be sort of at the helm, owning properties, thinking about what's going to happen to them, how we're going to change them, how we're going to make them better. So that's my career background, but it's been a fun ride.
That's awesome. That's awesome. So me as your coach, I want to know, again, what is your why? What's driving you to do this?
Yeah, it's something that whenever you first kind of ask the question in the essays at the beginning that I had to think about, but I had fortunately reflected on a lot before, leaving my job and starting the firm. But it kind of went back to when I was a kid. And as far back as that, I remembered wanting to build and create spaces where my friends and my family and people I loved could build our lives and have our dreams and play and have fun. And I think as an adult, that sort of turned into wanting to build and create those spaces for lots of people. So I think it's just creating spaces for people is something that really drives me and that I get a lot of joy out of. So
that is great. That is great. So thank you for sharing that. But what made you want to pursue being mentored?
Mentorship kind of came when the decision happened that I said, okay, I want to do this for myself. I want to start my own firm. I want to be an investor. I want to own property. And then that's where I said, okay, I can read books. And I read books. I took online classes. I did all these different things. And then whenever the time came to actually do it, I said, there's a lot of stuff I don't know. And there's a lot of things about the journey ahead that I can't see because I just, there's a place where you know what you don't know and a place where you don't know what you don't know. And I was at a place where I didn't know what I didn't know I didn't know. And so when you get that many degrees of not knowing things, you need some help. And so that's where I said, okay, I might have watched some videos, I've seen some online courses, but I need a mentor, I need a coach. And then that's when I learned about your protege program. I had already taken your online course. And so from the teaching I got from that, I was like, okay, if Peter, it was my coach, he could definitely sort of help me avoid a lot of the pitfalls that people have when they're just trying to get started. And now having the hindsight is 2020, it's probably the best decision I ever made. It really has kept me from a lot of sharks that are out there preying on people who are new into the business, whether just like in terms of getting started or even just all along the way in terms of capital raising and finding lenders and everything else. So definitely like the best decision I could have made in like getting started was finding a good mentor and a good coach.
Great, great. Thank you. Thank you. So now the exciting part, let's jump into the deal.
Yeah.
Okay. So this is the exciting part. And Allyson, I have to tell you that you followed everything to the T. So you are the ideal student. Okay. And so let's talk about the deal. Could you share a little about the deal, what you liked about it, the size and all
Yeah.
that? Yeah, go
Yeah.
ahead.
Absolutely. So Gulfwind Apartments is the deal that I just closed maybe a couple weeks ago now. But it's a 60,000 square foot, 66 unit property, one block from the beach. Really, really beautiful property built in 1969. So it is Class C, working class sort of tenant base. But what I loved about the property most, well, number one was the price that we got it at. So we were able to negotiate a fantastic price because of knowing the seller motivations, because of the work we did in the diligence phase of understanding more about the property than maybe they did with the inspections that we did and with understanding, okay, what's really happening with the HVAC systems and all those other things. All that allowed us to negotiate a price that was almost 18% below the comps in the market.
Yeah,
So that just put us at a great advantage starting out. And
yeah,
then tons of value add as well. So
that's awesome. So Allyson, can I stop you for a second?
yeah.
What wasn't it cool? We can't share this with our audience. It's proprietary, but wasn't it cool how we found the deal?
Yes. Yes.
Yes, right. So we can't talk about that, but I thought that was so awesome. You did a great job. Okay. Okay. So continue, please.
Sure. Yes. And then I guess the final pieces and the things that I liked about the deal were the number of value adds that there were. So the fact that we could allocate back utilities, the fact that we could do some renovation work and see an increase in rents. So a lot of that just made it so that it was almost like the perfect deal that you could just purchase it, get it off market, and then get it at a great price, and then also still have a bunch of value adds you could do to it. It's a little bit of the trifecta of what can make a great deal.
Yes, yes. And this 66 unit, it was the second deal you did with us. The first one was a smaller 7 unit, right?
Mm-hmm.
That you're still working on. Then you went from a 7 unit up to a 66 unit, $5
Yeah.
million property, right?
Yes.
Yeah. So I think a lot of folks out there want to know, how did you finance it? How did you find a down payment?
Yeah. Faith. Faith was a big part of it. And then perseverance, which is something that Peter talks a lot about. I think those two things really were a big part of it. Because I remember, not even the down payment, but the earnest money I didn't have. And so I remember when, the seller first said, we went through the whole process of diligence and putting together the contracts. And then the seller, when they finally said yes, and I realized I had 7 days to get, several, tens of thousands of dollars over to the seller. And I said, Peter, where's this money going to come from? He's like, oh, you're just going to have to talk to some friends and family and reach out to folks, and had just a few different ways and creative solutions of how I could find the money. And so that made it so that I think it didn't even take 7 days. I think within 3 days, we had all the money put together for the earnest money deposit, as well as for the inspections. And so,
And also the earnest money deposit, you were wondering where it was coming from. But within a few days, not only did you raise that deposit, but you raised probably 4 or 5 times the amount, right?
I think I went out and asked friends and family for a certain amount of money. And I think within maybe 4 days, I had 4 times that amount of money, which ended up making it so I had my first investors in the deal itself. Mm-hmm. And so it made it so that, the final raise wasn't as big of a task anymore, because I was like, oh, well, I already have all of this much in the bank. Like, there's only a little bit left to go. So
yeah, so you learned right away that money follows a good deal, right?
Very true.
Very true. Yeah. Okay, so share with us more about the financing and the down payment. How'd you raise it?
Yes. So with the financing, I think the next big hurdle, once we got under contract and we had the earnest money deposit was finding a loan sponsor, which is, I think, another challenge a lot of beginners face. is how do I find someone with multiple millions of dollars of net worth? And so that was, different conversations that we had to have of going through and locating the right loan sponsor. Fortunately, I had an older brother who was actually able to become a loan sponsor. So that helped a lot with the deal. And then from there, we actually just started the broader fundraising. So that's where we set up webinars. That's where being a part of Peter's program was really helpful because we had the templates and the tools to be able to create a very compelling story and a compelling narrative. It's one thing to have a good deal. It's another thing to have the right investment strategy, but to be able to share that story with people broadly becomes really helpful. So knowing the charts, the tables, the information that investors need is so helpful. And it gave us a presentation that, I think the first time I shared it with some friends and family, they were like, wow, this is what you're doing? This is like amazing. Like, I didn't even know you did all these things. I'm like, oh yeah, I just whipped up this thing overnight. But definitely had a lot of help in making that happen. And then it was just, and then after that, it just became a perseverance effort. So I think by the end of it, we had over 130 investors in the deal. And I thought with a webinar that people would just be like, transferring money right and left to give me money. But I ended up realizing that after a webinar, you have to have a follow-up phone call and maybe two. And if you do the math, like you get to 150, 200, 300 phone calls. It's a lot of time. So, yeah. But ultimately, when you have a great deal, like people want to invest, people want to be a part of.
So I think the other thing that maybe the folks out there want to hear, of course, you've had obstacles to overcome here, right? Lots of them. We had lots of phone calls. And so share with us, what are some of the obstacles that you had to overcome and maybe how coaching helped you?
So I'd say probably two main ones. One was the fundraising. Where's the money going to come from? Was like the big one. And then the second one was, how am I going to operate and manage this deal once we have it? And so the property management piece was a big one for me. Prior to this program, I had done some single family investing with single family residential and like owning houses and doing flips and foreclosure and things like that. But then you have one tenant, one property, not as much to deal with. And so the question became, what's going to happen when I have 66 tenants and staff and all these other things. So that was definitely like one of the fears up front, combined with the fear of like, where's all this money going to come from? And so I think that's where on both fronts, the coaching helped. On the money side with helping me think through what's the plan, what's the strategy, how are we going to go through and actually like fundraise, what are the tools that are needed, and going through that part of the process. And then on the property management side, really just like a ton of homeworks and videos and trainings on, how do you find a good property manager? What are the things that whenever you're interviewing them will allow you to know if they're good, if they're bad, if they really know what they're talking about. The integrity piece of making sure that you have people that, are going to do the right thing. Because we definitely had someone that we talked to along the way that were not property managers of integrity. And then even like once we had the property managers and now that we've closed the property, how do we then interact with them on a week-to-week basis? Like what are the templates that we need to run our Monday morning meetings to make sure that the vacancy levels are where we need them to be, to make sure that the capital projects are happening and underway. So all of that, is stuff that didn't come from the brain of Allyson, but came from the coaching and the mentorship. And I think knowing that I'm partnered up with a mentor that has done this a long time, who's been through all the pitfalls and holes himself, and who also has, seen a lot of things with his other students that he can say, hey, I've seen this before. Stay away from this or stay away from that. Just makes it so that, not only I can be more successful, my investors can be more successful. My investors can feel more comfort that, there's a lot of expertise, a lot of wisdom that's behind the scenes with managing their property.
Yes. Thank you. So one of the most important things that we teach and preach at our company is exit strategy. It's so important, right? Because it sets up the beginning, not only the end, but the beginning. So share with us what your exit strategy is for this project.
Yeah, so I mean, right now the exit strategy is that in 5 years we'll sell. And so it's a 5 year hold at this point. Mostly that's because of with the COVID-19 pandemic, where it's unsure, like, what vacancies will look like, what rent growth will look like over the first few years. And so with that, we're taking some very conservative assumptions on the front side, which make it so that we'll look at doing a sell in 5 years. However, if things end up being like more favorable and looking better in the first few years than we think, we may look at doing a cash out refinance at years 2 or year 3, where we'll be able to get our investors their initial equity back. We'll have the accruals in terms of the back end returns that we give people, and then we'll just hold and we'll cash flow on the property. And I think every single investor I've talked to, whenever we talk about that strategy and continuing to get a paycheck for as long as they can see, they kind of like that idea.
Mhm.
So we'll see how the markets turn out. But what sort of the main exit strategy of a 5 year hold, and then a backup strategy that may take place with like the cash out refinance in a couple of years.
Okay, great, great. Now, Allison, so earlier this year you bought your 7 unit, and
Mhm.
then recently you closed on a 66 unit, $5 million deal. And share with us what you have under contract now.
So now we have a 241 unit complex, 10.5 acres, 23 buildings, that we're planning to close on in a couple months' time. So that's building number 3. So yeah, so that's like what we have under contract now. It's actually a sister property to the property that we just closed. So same seller, similar seller motivations. And now we're just kind of in the final phases of getting the rest of our capital structure together and like finalizing all of our fundraising. And then we'll use the same property management company. They're all raring and ready to go. We've got insurance. We've got all the different pieces of the puzzle together. So we're super, super, super excited about that deal.
So on the $5 million 66 unit, what was the amount of your capital raise, your down payment?
Yes, we had 2.2 million that we
Okay,
were
2.2 million. And on this, the next project, the $18 million project, what's the down payment requirement? Capital
6.7.
6.7. Okay. Okay, great. So you're doing it, right? So, and that's why we have this video, that it is possible. It is possible
Very much is
to go
possible.
from a 7 unit to 66 unit to a 241 unit. It's very possible.
Yes,
Yeah,
absolutely.
yeah. Okay, all right. So Allison, second to the last question. What's your plan for next year?
Buying more buildings. So we'll no, in all honesty, so it's October, end of October now. It's Halloween Day. We should close on the 240 unit building just before Christmas. So it'll be a great Christmas present for everybody. Then we'll actually probably take a couple of months and just sort of let everything settle. So make sure that we get really strong distributions for our investors in like the first quarter. Make sure that that 240 unit is stabilized. And then once we have, I think it's over 300 units at that point. And once we have all of those units stabilized, cash flowing, doing really well, then we're just going to turn on the acquisition engine again. There's still a number of sellers that wanted to sell their properties earlier this year, and we had to say like, hey, we're going to take it. We're actually pulling out for right now. We'll just circle back around because we needed to focus on all these other deals. So may loop back around to some of those sellers that we'd already talked with early next year to just like start the process of purchasing more properties. And so the goal for this year is 3 properties. The goal for next year is much more than 3. So
Awesome, awesome. And so last question, for those of us that are listening that want to do what you're doing now, what are 1 or 2 tips you can share with them just to encourage them and head them in the right direction?
yeah, I mean, so I think it really goes down to like the 2 things I was talking about before. So faith is, I think, a huge thing, like believing in yourself, believing in your dreams, believing that you can do it. I think particularly as a rookie and as a beginner and coming out of the gate, there will be so many people that tell you don't know what you're doing. You can't do this. Like you should give every piece of equity in the deal away to someone else because you're a beginner and you just should be happy to be a part of it. And I think having the faith in yourself to know that you can do it and you can be successful, is so important, because lots of people will tell you that you can't, but you can. And the other piece is the perseverance piece that Peter talks about. Just never, ever, ever, even when it seems like everything's lost, it seems like the contract is going to be off, it seems like there's no way that you can get past next Wednesday because the seller has told you a million times that after next Wednesday, he's going to pull the deal, and it's now Monday and you're like, can't do the deal. How are we going to do it? Don't quit. Don't give up, because there's always a way. And I think that's one of the most important things about commercial real estate is that, if you look, if you search, there was always a way to make the deal happen. Those are my two pieces of advice: is faith and perseverance.
That's awesome. That's awesome. Thank you for sharing those two very important things. So Allyson, thank you for taking the time this afternoon. I know you're a very busy person. And so I just want to say thank you for sharing your very, very inspirational story with all of us. We'll be talking soon.
Okay, that sounds great.
Okay, thank you, Allyson. All right, welcome back. Wasn't that a wonderful interview? Isn't she an amazing young lady? So what I would like you to do, if you can just put in the comments, congratulations, or just encourage her and just say congratulations to her. High five, Allyson. So an incredible student with such a very, very bright future. All right, so in this portion of the video, I won't keep you too much longer. I just want to do a quick recap of what happened, okay? And how to set you up to do what Allyson did. It's not that difficult, actually, okay? Starts right here. All right, so number one, on the recap, let's discuss the money again. So Allyson had to raise $2.2 million, and you're wondering, how did she structure it? Well, she paid her investors a preferred return. I can't mention any of the numbers because this is a SEC registered deal, but I can tell you she gave them a return between 5 and 10%, okay? And then after that, she splits the back-end profits with investors so she can boost the overall return. That's about as much detail as I can give you, unfortunately. It is SEC registered. Secondly, she made 300 to 400 phone calls. Now, how does she do that? Well, it comes down to how bad you want it, right? So Allyson had this deal under contract. She didn't have the earnest money. She called me back up and said, Peter, what do I do? So we talked, and I coached her into calling people that she knew and calling people that she knew that knew other people until she was able to raise the earnest money deposit. So again, in the video, not only did she raise that amount of money for the earnest deposit, but after she made her phone calls and used our materials, she was able to raise this much, okay? So that allowed her to get the property under contract. And then she had to raise the remaining $2.2 million. Her brother did not put in the $2.2 million. She had to raise it herself, and she made 300 to 400 phone calls, I guarantee you. So she busted her butt. Again, how bad do you want it? Okay? All right. Second thing is exit strategy. You hear us talk about that all the time. Exit strategy is so important. It's one of the biggest fail points of beginning investors is not thoroughly thinking out how you're going to exit from the deal. Because exit strategy sets you up at the beginning, middle, and end. So if you don't have one, don't do the deal. Okay, got it. You need to have exit strategy. So hers is pretty routine, pretty common in syndication deals like this. Okay, so number one, she's gonna she has two options. Her first option is to sell in 5 years, pay back to investors, and split the profits with them. And then guess what? She splits handsome profits with them. What will they do? They'll put the money back into her so she can keep on her syndication journey. Or if things work out a different way, what she really would like to do is to do a cash out refi. Just like you would refinance your home, you can refinance a commercial property, pull out enough money to pay back the investors, right? Pay them off, and then keep the property herself. So that will be ideal for her. So those are two options, okay? And then the third thing I want to talk about is probably the most important, okay? It's your mindset, okay? So you have basically two choices in having the proper mindset, okay? You have two choices. You can either have the right mindset, okay, for success, or you can have what we call stinking thinking, right? So I want to help you out here. So Allyson had the right mindset. And we have a video called Do You Have the Right Mindset to Be Successful in Commercial Real Estate? The link will appear right now, so you can click on it and watch it. Okay? Now, Allyson, I wanted Allyson to share two things that helped her the most. Okay? Or two tips for the beginning investor so you can do exactly what she did. Her answers were, number one, faith, believe that she can pull this off. Okay? So if you don't believe you can pull it off, you're right. But if you believe you can pull it off, you're right. Okay? So number one is her faith. Number two, perseverance. That is so important in this business. Okay? So this link here, the mindset link, will appear a second time to emphasize how important it is to have the right mindset. So that link will appear one more time, and I want you to, after this video, click on it and watch it. Okay? And if you can implement it there, believe me, your life will be different, very different in the near future. All right, everyone, so thank you for watching this video, how a beginning student purchased a $5 million 66-unit property. And thank you so much, and I'll see you at the next video.